Bitcoin is 1 week away from doing something that it has done only once in its entire history. Not a new all-time high, not a breakout, a 6-month losing streak. If March closes red, that's 6 consecutive red monthly candles, last seen back in 2018-2019. So the question is simple here. Is this the beginning of the end, or is that the kind of moment investors look back on later? So let's break this down. Right now, Bitcoin is barely holding green for March, as we can see over here. If it flips red, we match the longest losing streak ever. That previous streak we saw back in August 2018, as you can see, up to January 2019. Price dropped, if we look at the chart, the price dropped from 8k to around 3k. The sentiment back then was completely dead. What happened next though? In 2019 we saw Bitcoin rallying to 13k, and 2021 the cycle top occurred at around 69k. Now, this doesn't mean that history repeats, of course, but it gives us context, because today Bitcoin isn't at 3k, it's sitting at around 70k as we speak. So yes, same pattern, completely different scale, and that's called cycle evolution. Now, let's get into why this actually matters. Let's look at the 200-week moving average. This is the most important indicator for long-term investors, the most respected long-term indicator in crypto. Why? Because the idea is very simple. It averages 4 years of price data and it removes short-term noise. So it shows the true long-term trend. Historically, this level acted as bear market bottom zone. And if you look at the examples here, we saw the same in 2015, price touched the 200, weekly moving average reversed. 2018, brief break, recovery. 2022 was slightly different. We broke below, stayed under for a few months, but then we recovered. This last one was key. Bitcoin dropped 78%, and that was the worst modern bear market. Now, fast forward to today. The 200-week moving average is hovering around 59k, around this zone over here. What happened recently? Back in February 2026, just a month ago, Bitcoin dropped to around 60k. Came very close to it, didn't break it, bounced back up. This cycle is very similar to 2018, 2015, and since then, we are holding above it for now 2 months. That's a major difference compared to 2022. Back then, we lost support completely. Now, we are still holding it. That tells us one thing, the long-term structure is still intact and we're about to recover. That's based on the 200-week moving average. I don't say that we are late to see Bitcoin dropping further. No, we can see that, and we can see the pattern from 2022 being repeated. That's very possible. But what I mentioned earlier, we're going to see the longest streak in history, something that we've not seen before, and I don't know how likely this is going to happen. Then the second thing that I want to add here is the Bitcoin versus gold ratio. Most people only look at Bitcoin in USD, but smart analysis looks at relative performance. And that's the Bitcoin versus gold ratio. Instead of dollars, we ask, how many ounces of gold equal 1 Bitcoin? Right now, around 16 ounces per Bitcoin. And the key trend, Bitcoin has been losing to gold for 8 straight months, that you can see here on the chart. 8 big red candles. But in March, this trend is potentially reversing. First green month versus gold in 8 months. This matters because trend shifts often start here, not in USD price. But of course, it's not just Bitcoin moving. Gold is dropping hard, around 25% from the highs. It has erased massive capital. Massive capital has been wiped out. So what is happening? Bitcoin is holding, gold is falling. And as a result, Bitcoin looks stronger relative to gold. So now we are stacking the odds here. Every cycle, by the way, this is a pattern. Bitcoin peaks versus gold, then underperforms, then bottoms, then reverses. We tend to see that. We saw this in 2014, 2018, 2022, as I can show you here on the chart. We'll not focus too much on 2014, 2018, or 2022. We'll focus on now. The peak, as you can see, was in December 2024. We are down 70% versus gold since then. And historically, these corrections last around 400 days. And if we draw the timing over here, where does that put us? It puts us right around now, right now. Again, not a prediction, but when multiple signals align, this is something we should not ignore. We see the 200 weekly moving average holding, Bitcoin stabilizing versus gold, and cycle timing lining up. That's when things, start to get interesting, and we should be focusing on these ratios and all of these signals. And the difference is that this cycle, though, is not like the previous cycles. It's not like 2018, 2015. Back then, it was mostly retail investors, no ETFs, no institutions. Today, we have spot ETFs that exist, institutions are involved, governments are watching. So this is why it is so important. And of course, we are right now in a moment of uncertainty. We have the war ongoing, which will have massive implications. So we can't purely say that history will rhyme this time, but we have a couple of signals lining up for a bullish reversal. That's on one side. And then the other side, as I said, we have some bullish signals stacking up, and these environments right now is where we can exit smart money studies and trends very quietly shift. It doesn't mean the trend would shift overnight, but we start seeing this shift. We might go one leg down, but again, every single dip is being heavily accumulated by smart money. But most people, we only notice after it's being obvious. So keep monitoring those ratios because they are telling you what is happening. The markets speak. We only need to listen. So that's for me today. I hope you like this video. Please don't forget to like, subscribe, and share. Thank you for watching. I'll see you in the next video.